Hey guys, welcome back to the tradinganalyst.com. This is Taylor. Let's take a look at some charts. So we're going to take a look at a few charts that I think are really important for the coming week and could have some implications beyond that as well. So if you're watching this a couple weeks later, these levels will likely be still very, very relevant. So the first one we're going to look at is Costco. All right, so Costco, these are the all-time highs, right around 308. This level right here, all-time highs. Okay, this is a very bullish stock. All right, we've got an uptrend right here that it just bounced off of. Here's a bounce, there's a bounce, there's a bounce, here's a bounce, and here we are bouncing once again off of that level. And not only did we just bounce off of it, but we gapped up near the end of last week. Not only that, but we also broke over this little downtrend line as well. All right, so we're breaking over downtrend lines and bouncing off of uptrend lines near all-time highs. To me, this is very bullish action. Can't get any more bullish than this, okay? And I think it's setting up for a new move higher. Okay, now let me remove these lines and get a little more detailed here. So the next thing I want to point your attention to is that we are extremely coiled, all right? We've been trading sideways, essentially sideways, between about 290 and 300 since August, okay? So for 1, 2, 3, 4, 5 months, okay? Actually a little bit more than 5 months. We've been trading sideways in this very, very tight range, okay? And we haven't even broken out of it yet. So imagine what kind of move we can see if and when we break out of this range. Last time something similar happened was over here. We traded sideways for about 4 months right here. Okay, this was June that we started to break out. You see that it went from about 250 all the way up to just shy of 310. Okay, it's a $50. I think that's about 25 or about a 20% gain, something like that. Maybe my math is off, but a big move in the stock. Okay, so we are trading in a very tight range. So that is another factor here. Now I want to kind of zoom it in to the more recent action. Okay, the next thing that happened was a false breakdown, all right? And here's what I'm talking about. This is what a false breakdown is, okay? So we have support, 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 all right? It's a clear level of support. Then we break this support, all right? And we hold under it for 3 days. Then, after holding under it for 3 days, we break right back over it, making this a false breakdown, all right? Now, not only did we break back over it, but we broke back over this little resistance. You can see it's clear resistance. All right, clear resistance. So we not only cleared back over this little support, but over this resistance as well. This is a very bullish setup overall for all of the reasons that I mentioned. Okay, so now let's move on to the next stock. The next one is EA. And I want to focus on the monthly chart because this is going to give you the best picture. Now, overall, this stock is in a very big uptrend. All right, you can see right here. All right, this is the monthly chart going back 5 years. This is 5 years of action. So now we have this uptrend. All right, the next thing that we have here is this sideways trading. All right, we traded sideways within this very tight range here for almost a year. Okay, so since January of last year. So yeah, almost a year, about 11 and a half months. And we just recently broke over that range right here to end December. We broke over that range. Now I want to show you something similar that's happened before. Okay, sideways trading right here. There we go. Sideways trading right here for about the same amount of time. Okay, so for about 11 months there as well. We broke over it here, You can see we kind of rested for a little bit and then just catapulted higher. That went from about 70 bucks all the way to 140, doubling in price. Okay, so this is the monthly chart where every candlestick represents an entire month of trading. So the reason why it's likely to break out is because when you trade sideways, like we did back here in 2016, same thing that we're doing right now that we did during 2019, is that you get an opportunity to rest. Okay, after trading sideways, you get a rest period. All right, and after trending up for a while, that's what stocks tend to do. Okay, so we came up here, we needed to rest lower, and now we're resting even more sideways, and we're just now breaking over that range. Again, I think Electronic Arts, EA, should have had much higher. I think most likely we're going to head back up to this range up here in the $140 range. Again, remember, it took EA last time over a year to double in price. Okay, so this is not something that you should buy weekly options on and get pissed if it doesn't get to 140 next week. This is a longer term play here. Okay, so definitely keep that in mind. If we get a dip back to this support, I think that's a massive buying opportunity, down to about 102, 103. All right, so that's EA. And this next one is Boeing. Okay, Boeing, this is one that I actually think is going to head lower. And let me tell you why. So first and foremost, we are in a downtrend. Okay, we are making lower highs. There it is right there. All right, lower highs. High there, a lower high there, a lower high there. We have yet to break this support right here. Okay, and I think that once it does break, we're going to see a huge move lower. And this is an if, okay? If Boeing breaks this support, then I think it's going to head much, much lower. And the reason why I think it will is because, first and foremost, the market has been ripping. All of 2019, we ripped higher. Now into 2020, we're ripping higher as well in the first couple weeks. And meanwhile, Boeing has been doing the opposite. Okay, we've been either trading sideways or heading lower for this stock. The next reason I think it's going to head lower is because last time we took this gap down right here and we bounced off this support. Okay, look at how it reacted. It came down and it bounced right off of it. Notice it did the same thing last time it hit this level too. Came down into it and bounced fiercely right off of it. Okay, it didn't hang around against this support. Now, notice the difference. First of all, the more touches to a support level, the more likely it is to break. Okay, so this time we bounced ferociously. We only hit it once, boom, and bounced right off, and we ended up making a lower high right there. Now we gapped lower, very similar to this action, but notice the very next day it actually gapped down again. Okay, gapped down again, it closed green, but it was a gap down. And then after that, we've just traded sideways for almost a month now. Okay, for about 3.5 weeks, we've traded sideways. Very different from this time and this time. So, to me, I think it's just waiting and building up energy for that next move lower. I think most likely we won't get a bounce here, and that after trading sideways for a while, we will just break this support. Once it breaks that level, I think it's going to head much, much lower. Okay, it's really had so many chances to head higher. The market has been ripping. This is a major stock, and it hasn't done so. So watch this support. Once it breaks 320, I think it's going to waterfall lower. And if you look here, let's just look at the weekly chart and go back like 3 years. Okay, let me move my face out of the way. So you can see that we've been in this really tight range right here. Right there. Okay, trading sideways. All right, trading sideways. Now, again, like I discussed in the earlier stocks, like Costco, when you or also Electronic Arts, is that when you trade sideways, you build up a lot of energy. Okay, same thing over here. When we broke out back here, traded sideways for 6 months, and then boom, we broke out of that range, headed higher. Something very similar could happen here. This is a very tight range. It's just waiting, building up energy, in my opinion, for a move lower. So watch that 320 level moving forward for Boeing. The next one we're going to look at is Beyond Meat. And just coincidentally, this last week, we actually bought our first Beyond Meat product. So is that a coincidence? I don't know. Maybe. Probably it's a coincidence, but just a funny little thing. So we're going to look at the daily chart here in a minute, but this is the weekly chart for now. And I want to show you, this is last week's volume. And this was the second largest volume week ever for this stock. Last one was, the biggest volume week was over here when it went from about 120 all the way to 240. So it doubled in price last time this happened. Okay, and again, it traded sideways. Look at this super, oops. Look at this super tight range right there. And then now we broke over that range. Very similar to, if you look over here, very tight range. We broke out of that range to the downside, and then you saw a big move lower from about 140 all the way down to about like 72 bucks. Okay, so it halved in price. And this is actually a play that we actually were short on via put options when it did that. But now I think it's going to head higher, which goes to show you that you should not carry opinions for stocks. Okay. So the next thing I want to kind of discuss too is we are still in a downtrend here, kind of longer term. I mean, I guess if you count this, this is a higher, that's a higher high, this is a higher low compared to this low, but in this time frame, we're still in a downtrend. That's why my first or my second target is up here at about 120, because that's where that downtrend line is right there. But what I want to discuss here, let me kind of zoom it in more and get my face out of the way. Let's get it over there. Okay. So, as you can see, very tight range. Look at this. For about 3 months, we didn't go anywhere except sideways. All right? Now I want to bring your attention to the move out of this range. So not only did price move out of that range, but we have some of the biggest volume days all in a row. 4 of the biggest volume days in a row. All right here. Okay? The last time that happened was over here. Boom. Several days in a row, high volume, and you can see that marked a big move lower. Another time, over here. Here's this little bunch of high volume days right here. That led to a big move higher. And you might be thinking, oh, well, it headed lower after that. Well, yeah, after it went from about 120 to 240 and doubled in price. Okay, so we're looking at this as a trade, not as an investment. Okay, I don't invest, point blank. I trade, and that helps the success rate, I think, because you have stop losses, you have targets, and everything is very technical, and you're not really worried about the future value of the stock or anything. You just want to get the momentum that is happening right now. Okay, because for all I know, after Beyond Meat bounces to 120, 140, maybe in 2 years this stock could go bankrupt and go to zero. I don't know. But anyways, when you're trading, you don't need to worry about those things. So, sideways range, breaking out of that range with 4 of the biggest volume days ever for this stock. All right, so volume is a key indicator here. I don't even like to call it an indicator because it gets mashed up with RSI or MACD and all that stuff, but volume is nothing like any of those things that I mentioned. This is real stuff. These are shares. These are people buying the stock right here, not some squiggly line that moves off to the side based off of some calculation of price. This is real stuff right here. Okay, so Beyond Meat, I think it's going to head higher. First target's going to be that gap fill at about 105. There's that big gap right there. Second target, 120. Beyond that, about 140 should be that next target. I don't know if all of these targets will get hit. I think it's very likely that 105 will get hit. I think it's likely that 120 will get hit, but the odds get slimmer as you get higher. So we will see, but I have a trailing stop on this position either way. So we're going to catch the short-term momentum and see how far it can push us. So that's Beyond Meat. The next one is Tesla. This is one that a lot of people are interested in. All right, so this is the weekly chart. And we are coming into a familiar level here for Tesla. You can see this top trend line has kept Tesla in check many times for the last 10 years. Okay, we hit it here, headed lower. Here, headed lower. Here, headed lower. Okay, so you can see, obviously we've headed higher after that. You know, after hitting this, we head lower, and then eventually, obviously, this is a high, a higher high, a higher high, and this is an even higher high. Okay, so obviously, longer term, this stock is in an uptrend. Okay, it's bullish. But we're coming into a level of resistance. This stock has more than doubled in price. It was at 200 earlier this year. All right, and now we hit 500 or almost 500, something like that. Let's see the high. Yeah, 498.80. Okay, so almost 500. We more than doubled in price. What is that? 150%, something like that. I don't know if my math is off, but yeah, huge move. Now we're coming into this level. Notice too is that when we came into this level, just like we did over here, you can see that little bit of topping tail. Same thing here, a little bit of topping tail. What are we doing here? We tried to break over that level, a little bit of topping tail. Now, I want to point out the volume, okay? Volume typically marks tops or bottoms, all right? So, we have two of the biggest volume days that we've seen a long time in a row, two in a row, right here. Heavy volume. Look at this volume right here. All right, after trending up for a long time, and now we're seeing this heavy volume. Okay, why didn't we see the volume over here or over here? Okay, we're seeing the volume up here because I think that people are selling up here. Okay, and they're offloading into this resistance. We will see, but it matches up with that theory with resistance. You know, why didn't we have the volume earlier? And you might be thinking, well, there was heavy volume right here, but this was at the beginning of the trend. This was when the stock was, broke out from 210 up to, 270. It was a big gap up from here after trading essentially sideways right here and not trending up. Trending sideways for about 3 months right here, and then we broke out. That's bullish. Okay, after trading sideways, getting a breakout over resistance with some heavy volume, this is bullish. But we trended all the way up, doubling in price. 250 all the way up to $500, and we didn't see any heavy volume until now. All right, so there's a big difference between this heavy volume and this heavy volume that we're seeing right now. This came after sideways trading for 3 months, and this heavy volume came after trending up, blasting off higher for 3 months. Okay, huge difference. Okay, volume tends to mark tops and bottoms. It works the same way. If you're seeing a trend lower And then all of a sudden, after it's been trending lower for 3 months, you all of a sudden see a ton of volume. Then you want to look for potentially buying at that point, okay? It washes out all the sellers and introduces new buyers. Now it's the same way, okay? It gets rid of all of the buyers, okay, and introduces new sellers. So that is Tesla. I think the odds favor at least sideways trading from here, at least. More than likely, we're probably going to see at least some kind of a retracement lower, which would be totally normal for a stock that has been trending up for a while, okay? So that is Tesla. So what we're looking at right now is the portfolio tracker that we use here at thetradinganalyst.com to track all of the closed out trades that we've alerted in real time to subscribers here at thetradinganalyst.com. To get these results, I have texted the exact buy price and sell price in real time via text message to all of my subscribers. When you sign up and join, you'll be able to get access to the trades that have produced these results. So let's take a look at the numbers. So the average win here is about 50%. The average loss is about 33%. We trade mostly options. About 85% of the trades that we make are for options. About 15% are for stocks. Now, if you don't trade options, don't worry, because you can use the option alerts to trade the stocks. For example, if we alert Electronic Arts call options, you can just buy Electronic Arts EA common stock. Very simple, okay? So the next statistic here that I want to point your attention to is the average length of trade in days. And that is 10 days. That means from the buy point to the sell point, that's about 10 days that we're in the trade. So what that means for you is that you can participate in these trades no matter what kind of lifestyle that you live, unless you get hit by a hurricane and you lose cell service, like I did when I was living in Puerto Rico a couple years ago. Well, I'm getting off topic, but but as long as you're going to have access to your cell phone, like I do right here, you're going to be able to participate in these trades because these are not day trading. We don't have a chat room. These are longer term swing trade positions that last an average of 10 days. So if you've got a job, full-time, part-time, stay-at-home mom, stay-at-home dad, in school, or if you just live a busy lifestyle like the rest of us, you're going to be able to participate and make money alongside of us. The next statistic that I want to point your attention to is the average win in dollar amount. And this is different from the average win in percentage because each of our positions also comes with a recommended position size. We do not do the same amount of capital on every trade. Okay, so if you're watching this, regardless of if you join the service here or not, but you should not be using the same amount of capital on every single trade because not all trades are created equal. Some trades are higher confidence trades. For those kind of trades, you want to put more money on those trades because they're more likely to be successful. So you want to put your money on the more likely winners. Conversely, on the other side, for your more risky trades or trades that you're not as confident in, but you still want to take because they're still good trades, you want to put less capital at risk. And that is how we're able to achieve our wins here in the dollar amount, because that is what matters here, the dollar amount. Okay, the percentage gain is great, but the dollar amount, because that's what's putting money in your pocket or taking money out of your pocket. Okay, at the end of the day, our average win is double the size of the average loss, actually more than double. And this is a huge factor in why over the last almost 2 years we've been able to have a total gain following all of our trade alerts here at thetradinganalyst.com. The wins, the losses, the break-even trades, everything gets factored into this total gains here, $319,000. All right, $319,000. So If you'd like to make winning trades on a consistent basis, then I encourage you to sign up and join today. Now, I focused on these trades because that is, in the alerts, because that is the biggest factor here, the biggest part of the membership at thetradinganalyst.com is just putting your money in your pocket via profitable swing trade alerts. But you're also getting so many other things. You're getting, first and foremost, access to me. I'm a profitable trader. I make money in the market, real money. I also manage money for other people. Most services out there, first of all, are either paper trading or they're not making money in the market. I make money in the market. I have proof. Okay? Not only that, but you're also getting access to the private member-only videos. Okay, videos similar to this, but with a lot more detail about the trades that we're taking. This video is kind of a little more general, but I get a lot more detailed and specific in the member-only videos and go over the trades that we're either looking to take or that we have taken to help you learn and get inside my head and know exactly what I'm thinking. And in turn, that's going to help you learn and grow and get better as a trader on your own. You're also getting access to the watch list. You're also getting access to the open position list. The open position list shows all of our open trades. We have about 25, 30 trades, something like that, open right now. It shows all of the targets and the stop losses on the trade and any other kind of info that will help you navigate the market. We also have an educational section of pre-recorded videos of educational topics that I think are really going to help you grow and get better as a trader. So you're going to get all of that included in your membership when you join today, but most importantly, you're getting these real-time trade alerts. I'm going to text you the buy price in real time. I'm going to text you the sell price when we're selling and exiting the position, and I'm going to recommend a position size as well. So hopefully that sounds good to you. I look forward to helping you grow your account on a consistent basis, and I hope that you make that decision for yourself. I hope to see you in there. See you guys next time.